Okay, recording video on Saturday, the 1st of February 2025, just gone 2:50 p.m. Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap. We'll go through 15 of the largest futures markets and I'll show you what I'm seeing on my charts. Hell's bells, what a week that was. Last weekend's video we talked about trouble in paradise and we had blue professional bars taking profits at the highs. We had a huge sell-off Sunday night into Monday morning. We opened down about 20 points or so. By the time Monday morning opened up, futures was down 200 points. So that's quite a move. I'll show you that on the tick bar charts in a few minutes time. But then we spent the entire week crawling all the way back up to close the gap, and then we ended up pretty weak on Friday. So we'll go through those charts in a second. But before getting to that, just a personal note, but it's also a reminder for everybody, two important points. Thursday, we lost our internet here on the island of Kauai. We had a big storm on Wednesday night, a lot of wind, a lot of rain, and then on Thursday, we lost the internet for almost 24 hours, I think. It wasn't just a normal internet outage. They had some problem with the cable between the islands. No specific details, but we are on an island, so you have to accept these things. But always remember two things, because you can never know when these things are going to happen. First of all, have your stops and targets in the market at all times. Never enter a trade without following up by putting your stops and targets in. You can move them at any time, but it's like just having them there in the first place is really important. It's just basic risk management. And the second one is server-side orders. A little bit of a technical term, but it means that the orders are not being kept on your computer, but on your broker's server. So it doesn't rely on your charts signaling the trade to be taken. It's like those orders are already sitting on your broker's computers. So super important. If you trade without either of those two things, you're just taking a massive amount of risk. Luckily, it didn't affect my trading because I had a trade Wednesday night, which was long Japanese yen into the open that worked out. Didn't hit my target, but got out with a profit. And then I took 2 day trades on the E-mini on Thursday morning before the outage, 24 points. So I was happy with that. Luckily, I was out of the market when the internet outage hit. But you never know. You never know. Server-side orders and profit targets and stop losses in the market at all times. So let us get to the charts and talk about the E-mini daily chart first. And this is what we're running into at the moment. We got cyclical resistance on the daily time frame there. Yes, we're in an uptrend, broken record, talked about this forever. Last time we had blue professional bars, they were coming in on the dips, and we're seeing Rambo bars at the highs on the lower time frames, and that's why we're finding it difficult to get through this 6200 level. So this resistance is likely to come in the next couple of days, which means we're going to settle into having a little bit of trouble until these things all come together and we work out that cyclical downward energy. And that started on Friday, really with the confirmation of the tariffs with Mexico, Canada, European Union. But it's going to lead to a little bit of weakness. There's only one chart that we'll get to later on where I think there's a really nice setup happening, but we'll talk about that in a second. Anyway, so daily chart, that's what's on my mind at the moment, is that cyclical resistance and how we're going to play that out. A 135-minute chart here. Yes, we're in an uptrend. The background's in red here, but we've had this down bar on the afternoon on Friday, and we've got a sign of weakness. Cyclically, we've got a support there, pull back to end of trend. We should be running out, but we've got a little bit of weakness here, so we've got to see where this goes first. We have like a 1-bar reversal, and it comes all the way back up, so we'll see on Monday morning. But that's troublesome there. 45-minute chart. So this is showing the drop-off that we had into those highs last weekend, Rambo patterns, so being led by the amateur. So Rambo patterns at the highs, Rambo potential reversal of an amateur breakout, that's what it stands for. So it's being led by the amateurs, so it's a little bit suspect. And on the lower time frame charts, we have an unstable pattern there. We get this 200-point drop, and then the blue professional bars come in by the end of Monday and buy up that low there. The high of that blue professional bar, that whole sequence is super important. So when we got levels here, 23, 60, 23 to 60, 60. Yeah, so around the 60, 40 type level is just super important. We dropped here to 62s by the end of the day, and the blue professional down bars come in at the end of that day there. We're down here at negative 40,000, so that's pretty big read, and we got this sign of weakness here. We've got cyclical resistance coming here, so we're dropping into a little bit of trouble at this point here. But will they pick it back up on this dip? The professionals coming in between the 60-20 type level, 60-40s, and then reverse it and go back up. Let's wait and see. 15-minute chart. Here's an interesting chart. Even with the junkiness in this price patterns here, you can still see the pullback to end of trends rippling through the time frames in an unconventional manner. We've got a left shoulder here being made by pullback to end of trend on the lowest time frame. That's a left shoulder there. We drop down, pullback to end of trend on the intermediate time frames. That's the head of this move. Unconventional because the head is normally above the left shoulder, but doesn't always play out that way, and so things get hidden from the market. And now we're putting in pullback to end of trend on the highest time frame. So the end of trends are rippling through the time frames from the low to the intermediate, the high. So we're having trouble here, but it should play back up. It's just at what point do we hold and play out that cyclical energy here. And then into the highs, there we go. That's our Rambo patterns there with exhaustion buy. So it's unstable, that pattern, and that's what led to the decline, and that's why I was talking about the potential weakness at last weekend's video. There's our 200-point drop, and the blue professional bars come in. Big pro bars here, the background's in blue. They were buying that breakout on Monday afternoon, bang, and then we test back into that region with these bars here where the professionals were active. It holds, comes back up, and now we're testing back into the highs of that region. This whole thing has to hold for us to keep going. The exhaustion patterns that we had, we were up at 25,000 or so. We're down at 29,000. So let's see, but the next couple of bars on this 15-minute chart, we could easily get an exhaustion sell, a signal there, and this thing holds, and we just start to rally again. But we've got a little bit of work to do. Yeah, let's look at the tick bar chart here, because this is the work that we got to do. Cyclically, we've dropped through support on the low and the intermediate time frame. No end of trends here. We've got our resistance on the highest time frame. We've got cyclical crosses happening here, but we've got to go put in pullback to end of trend on the lowest time frame here. We've overshot cyclical resistance on the intermediate. This is in due, so it's potentially going to hold, but we've got some work to do, and I'm wondering if it's going to drop down to 60.40 before that's all over. And then here's the tick bar charts from 13,500 tick bar chart with the week's activity. Solid vertical yellow lines marks the beginning and the ends of the week. And here was the trouble that we had last weekend. So into those highs, blue professional bars taking profits. They buy the dip here and push it back into those highs, and that's where we got exhaustion buy, bearish divergence, big pro bars and professional bars. Everything's going on here at those highs. And then that's where we had the open on Sunday night, down 20 points or so, and then it just collapsed. Being led by the amateurs, though, all the way down here, Rambo patterns into those lows, and then we have a Rambo to Rambo channel, so they get forced out of their positions by the time this one comes in, and the blue professional bars start this ride. This is why 60/40 is critical here, because this is where those blue professional bars on the Monday afternoon started to get interested. We tested and tested again into that area. They took profits on Friday midday up here at the highs before the news with the confirmation of tariffs, and that's what led to this decline here. Exhaustion sell, getting the move going, and we've also got a big read coming on down here. So we've got exhaustion buy almost coming in to mirror those levels, and blue professional bars at the end of the week. But still, with these patterns here, we still have to play this out. Pull back to end of trend on the lowest time frame at the very minimum. The 60/40 area needs to hold. They played this beautifully during the week, forcing it back to right where it took off from Friday to Friday here, and then they've forced it down again. But as I say, 60/40 needs to hold. We're going to be looking to see if Monday into Tuesday if we get a reversal signal, the background turns into red, and this whole area has held at 60/40. And we continue the rally, but let's not get ahead of ourselves, so we've still got to play this downward energy out at the moment. So there we go, some thoughts on the E-mini. Let us go to the tip bar charts. We'll go through the Forex markets first. Euro chart. So the euro weakened. I was all bullish on the euro over the last couple of weeks, but we topped out. Exhaustion buy, bearish divergence, and flush patterns going down here. And the US dollar is looking strong at the moment. Rambo patterns with exhaustion buy, unstable. So there we go. They ramp into 5, get it wrong, bang, we come all the way down. We've not seen exhaustion sell on the downside yet. One little blue professional bar here at the lows, that's not enough to hold it, so we're still going down on the euro. British pound also weakened during the week, but it is stronger than the euro at the moment. It's interesting. Exhaustion buy, bearish divergence at the end of the week. Not many blue professional bars taking profits here, maybe on the retrace there, but they're getting in here, they're getting interested at 23 and a bit. So that's interesting whether that's going to hold. We had a little bit of strength here, but not confirmed yet on British pound. Aussie dollar topped out. Big pro bars, exhaustion buy, bearish divergence. Everything goes wrong at those highs. We drop into a decline, bang, but they've come back in at 62, big pro bars here. Exhaustion buy, bearish divergence, getting the move going, but no exhaustion sell on the downside yet. So they've come in at those levels. We're testing back down. So we've got to go see exhaustion sell before we can turn this thing around. Japanese yen. Now, this is a big pattern here. This is the trade I took into Thursday's morning, so Wednesday night to Thursday. We couldn't get through this level. We were going to be testing back up, so I went long at this point here. Had my target sitting at 38, 65.38. It didn't get hit, and so I had to get out as soon as this thing weakened. So big pro bars at these highs. There's a lot of activity in Japanese yen at the moment, so they're taking profits here at the highs. When we retrace into that level, taking profits again. Didn't end up with exhaustion buys at those areas there, so we're weakening at the moment. The background's in grey, and exhaustion sell, seemingly getting this move going. And it's all pointing towards strength in the US dollar at the moment, which is a result of the tariff news out of the Trump administration. 10 years. So we bottomed a couple of weeks ago on the 10-year with exhaustion sell, bullish divergence, flush, big pro bars come in here, the move gets going, we test into these lows, we haven't had blue professional bars at these highs, no exhaustion buy, but then this week we do get exhaustion buy, bearish divergence, flush. We got our FOMC shenanigans during the week, and we've come back with blue professional bars stepping in here. It's the area that it took off at the beginning of the week, and we're testing into those and taking off again. It's in the dark at the moment. We don't have confirmation in terms of price and volume, but we're above that support on better pro-am here. So yeah, it's interesting to see if that continues to rally on the 10-year. Gold had a very good week into 28.60. Yes, we ended up with exhaustion buy and bearish divergence, but no blue professional bars at the highs. So that was running out of steam at that point there, but the professionals have not gotten out there. So I'd be looking for the professional activity to step in on a dip there on gold. Same thing with silver. Silver had a very good week. Exhaustion sell, bullish divergence. We set off to the upside. Not a lot of blue professional bars here. They brought it down here at the lows, but we didn't see any blue professional bars till this little one here, but it wasn't happening on the way up. We haven't had exhaustion buy on those highs on silver, so it's still an uptrend, but we've got to settle back down to see where the blue professional bars step in again on silver, because that's still going higher. And Bitcoin a little bit of the reverse here. So this is Wednesday, Thursday's activity here. Exhaustion buy, bearish divergence, blue professional bars at the highs, and then we drop through trailing support on better pro-am, and we're in a downtrend here. Rambo patterns at those lows, exhaustion sell, but not a bunch of blue professional bars come in there to hold it yet. So Bitcoin's trending down over the weekend. Crude, now this is the one that's most interesting to me at the moment. So been bullish crude all year. Go back to the end of year video. We talked about that when crude was down at 69. We got up to 79, and there's the blue professional bars step in. They force it down at the point, but now down here at 72, there's a lot of activity this week. So we got exhaustion sell, bullish divergence, and flush patterns. So that's number one in terms of trading indicators. Number two, better pro-am comes in at these lows. You can see the backgrounds in blue, which means big pro bars, and here after the close on Friday's activity here, big pro bars coming in there. And cyclically, I think we're reaching some support down here. So we've got everything going for us. The background has not turned red yet into an uptrend, but a break above 74 with that basing activity, testing into those lows several times. A break above 74 would take us into another uptrend on crude. So that's very interesting to me. Natural gas, not so much. We've got Rambo patterns at the lows here at $3, but no blue professional bars down here. No exhaustion sells, so it's weak at the moment on natural gas. Copper, now, big pro bars here. A lot of exhaustion patterns at those points there. Just indeterminate there. There's nothing coming together at the moment. The background's in grey, so wouldn't be going long. Copper, so that's out. Corn topped out, big pro bars into those highs, then blue professional bars selling it down, but now at these lows, exhaustion sold, bullish divergence, big pro bars, backgrounds in blue have come in here. So 482 is interesting on corn. So is corn going to hold at that point? Soybeans, similar type thing, 1034, blue professional bars step in, but no exhaustion sell down here, so we haven't got everything coming together yet. And wheat looks weak. Exhaustion buy, bearish divergence, flush patterns, and then big pro bars at those highs, and then we sell off, we test back up with amateur up bars, so that's looking weak at the moment. Background's not in grey yet, so we've not got a confirmed downtrend at that point, but it looks like they were taking profits at those highs. So there we go, a rip around the charts. For me, crude looking very interesting, so let's see if we get a break in crude, and the Emini's down at the moment, but let's see Monday, Tuesday if we get to hold this 60-40 level. This week, going to keep my head down, trade well, make the minimum number of mistakes, and see how it goes with this week's activity.